So I figured it'd be kind of interesting to take a look and see how much you would need in shares of AT&T to be able to pay all of your bills. So let's hop over here on the computer and take a quick look. I actually didn't do any of these numbers prior, so we're legit just going to do this as we're recording this video. So I'm on Seeking Alpha here on screen, by the way, so you're going to be able to kind of follow along with me here. And what we're going to do is kind of take a look at some data points for AT&T. Now, one thing I do want to disclose before going through all of this is one thing is that they did announce some stuff about with their dividend getting cut and all that stuff. So these numbers are obviously going to change and whatnot. Now, if you're a holder of AT&T, obviously, depending on when you bought in, this is going to have a factor as well. So we're going to do an example of like if you bought in today, what this is going to look like. So you can see the current price point of AT&T is $28.78. And so we're going to kind of break some of this stuff down with our stuff. Now, if you're somebody who wants to get into AT&T for the dividends and start earning your dividend income but don't know which platform to use, what I would recommend is starting with M1 Finance. This is the platform I use here on the channel all the time, and I love talking about them. This is a great place to be able to focus in on dividends, invest just putting your money in and then having it reinvest for you as well when you earn those dividends. I'll have a link for them in the show notes down below. You can get a $30 bonus when you open an account and deposit in $1,000 within the first couple of days. So that way you can get your investing portfolio started right away. Again, I'll have them linked in the show notes. I'll also have tutorial tools if you need help to set up your account so it looks nice and clean. So let's get back to this. What we're going to be looking at is a couple of things. So this is our dividend summary right over here. So the current dividend yield, and again, I say current because this is going to change in the future, is 7.19%. Now that is a really high dividend yield because a lot of dividend investors talk about the 4% rule. Like that's obviously kind of like the golden standard. So, at 7%, even cut in half, this is still going to be a pretty solid dividend paying company, but those are some factors you have to consider going down the road. Now, annually, that is going to equate to every share getting you $2.08. Now they do pay out on a quarterly basis right over here, which means every quarter as of this recording is giving you 52 cents per share. That is pretty substantial amount of shares, amount of money that you're getting per share. Now, obviously they have their ex-dividend dates and all that, so we'll look at those. Their payout ratio is actually not too bad. It's a little over the goal that most people have, which is getting to 60%. Anything above that, it starts becoming more and more risky. The nice thing is they've been paying out dividends and having growth on their dividends for over 23 years. So 2 more years and they would have become a dividend aristocrat. That might not be the case anymore if they have a dividend cut. And then you could see here their 5-year growth rate right now is pretty abysmal in comparison to a lot of companies at 1.83%, which means that the money is not growing as much every single year. So that way your money becomes less and less powerful. So just something to keep in mind. Anytime you see this less than what you would typically see for inflation, that means your money becomes less and less valuable every single year when you get paid out. Now, this is what we're going to want to do. So let's bring up a calculator here and we're going to run some numbers here so that way we can get some ideas of how many shares you might need of AT&T to be able to make this work. Now, we're just going to go off of like averages, right? Because I don't know what your bills are versus what my bills are because we're probably going to be in different places and all this different information that can impact your bills. Now, let's just say for this example, we're going to have bills equating to a total of, I don't know, let's say $3,700 a month. This is for food, for living expenses, for car, gas, all that stuff, $3,700. So that is what we need to be able to have, a comfortable living situation. Now, AT&T technically pays out on a quarterly basis like we talked about. So they don't pay out monthly. So you technically have to kind of prepare yourself if all you invest in is this one stock, which might not be a good idea, talk to a financial advisor about that. But investing into just one company might be a little too risky. But let's just say you are just investing into this one company. So we need $3,700 every single month, which means if we times that by 3, we need about $11,000 every single quarter because that's when they pay out. And then you just have to plan for it ahead of time, right? So if you get paid out this quarter, you got to save, a little bit of money for the next 2 months before you get paid out again. So we sit here and say, okay, well, we need $11,100, every single quarter. What does that equate to when it comes to actually earning these dividends? So what we're going to do first is we're actually going to go ahead and divide this by 52 cents, and that comes out to 21,346. That's the number, right? So what does that number mean? Well, that's actually the amount of shares you would need to be able to get paid out that 52 cents. Now, There are some other factors, but we're not going to get into it today, which is, paying taxes on dividends, having all that stuff accounted for. For this example, we're just going to ignore the tax reasons because maybe all you're going to get paid out is just these dividends and, you'll pay zero taxes if it's under a certain dollar amount. So let's just go with that example. So no taxes. So you need 21,346 shares. So what does that equate to for dollar wise, right? Because let's say the money you want is today, right? And before we plug in this number, because it's going to be a pretty large dollar amount, it might freak you out to say, oh crap, I need that much money to be able to get, enough to pay my bills on a monthly basis. Well, the thing you really have to consider is the fact that when you go through this process, if you're buying in today, but you don't need this dividend income for another 15, 20 years, those dividend increases and everything else that kind of comes with investing for the long term will have an impact on you as well. So you don't actually need as much. So it's kind of a cool thing. So let's go and add this up. So we take this, times that by whatever the current price point is of the shares, because that's how many shares we need. So we need about $614,342.30, give or take, right, on this total. And that's how much you would need to be able to live off of the income that's coming in from these dividends every single month. But again, you're getting paid out quarterly, and you just save that $11,000 between the 3 months until the next paycheck. But that's how much you would need. But that's only if you invested today, because you needed the money today, right? But let's say you needed the money years from now. Well, you don't need to plug in 614,000. So let's go ahead and go to this dividend calculator right over here. So let's go ahead and say you start off with a principal of 0. The current dividend, what was it? Oops. Let's switch over here. 7.19%. So 7.19% is their current yield. Let's say it's in a taxable account. And let's say you can put in, let's say $1,000 a month, right? So I have never done this before, so we're going to actually figure out the exact number. So expected annual dividend increases per year. Now, we saw that their last 5 years on average has been 1.83%. So let's just go ahead and plug that number in just to kind of be safe here with their examples. Quarterly distributions, tax rate, let's just go ahead and say it's 0 for now. We're not going to focus on that. And then expected annual share price appreciation. Now, AT&T has been pretty abysmal when it comes to their actual performance over the last so long. 5 years, it's actually down 30%. 10 years, it's down about 7%. So we're going to just kind of go with, let's just say 2%. I mean, that's being pretty modest or pretty nice for this company right now. So DRIP, just to give you an example, stands for Dividend Reinvestment Program. So this is just taking whatever dividends you earn right now that you don't need and reinvesting them back in. So we're going to say yes, and we're going to say 20 years investment. So let's go ahead and click the calculator here. We'll get all that stuff out of the way. So let's clear that up there. So you can see here that after 20 years, your portfolio balance might be worth about $800,000. Your annual return is about 11.6%, and your annual dividends is $85,564.34. Obviously, if you divide that by divide that by 4, that gives you $21,391 per month that you would, or per quarter. And then if you divide that by 3, that's how much you would be getting per month is $7,000. Obviously, that's way more than you needed, right? So let's kind of mess with these numbers a little bit to see how this would work. So let's go ahead and say the amount that you could put in is, not $1,000 a month. Let's say you could do $6,000 a year. And let's go ahead and say, so that's already there. So obviously this is still with their dividend yield going the way that it is. So let's go ahead and go back in here. So now we're sitting at 42,000. So we're putting in half the money every single year. So $42,782 divided by 4 gets you about almost $11,000. So it's $10,700. So this is pretty close to be able to hit that goal that we talked about. So there's the ads. So let's bring this back up. So for this example, to get $10,700 every single quarter, which then if you break that down would get you about $3,500 every single month. you would have to have your portfolio, if we started at 0 today, right? Let's just say we started at 0. You got your annual dividend yield at 7.19%, which can and most likely will be changing here with AT&T. It's in a taxable account. You put in $6,000 a year, so about $500 a month. And then you could see here our annual increase for the dividend is 1.83% on average. Quarterly distributions, the actual share price goes up about 2%. And then you can see your drip right over here. It gets reinvested for 20 years, and that would get you to that goal. Now, let's say you put in $1,000, because if you opened up M1 Finance and put in $1,000 at the beginning, let's see how much this changes for you. So now that jumps up to ending balance of $400,000, annual dividend of $43,000 right over here. So let's see, what was the beginning? Oh, it cut it off. So it's about a little over. What is that? Because that's 42,782, 43,627. So a couple extra $1,000 that you'll earn annually because you put in $1,000 extra now. Because if you opened up that M1, you actually get that $30 bonus, so you would actually get $1,030 to start investing with. But you would actually earn every single year well over an extra $1,000 in dividends because you put the $1,000 in now, plus all the growth that would have over the next couple of years. So that's effectively what you would need to be able to get over, enough to be able to pay your bills with just AT&T stock. But again, being invested with just one company can be pretty risky, and that's definitely up to you on if you want to take those risks. But knowing that AT&T is going to be having potential dividend cuts here in the future will obviously skew these numbers, so just take that into consideration. You can use those numbers. The website was marketbeat.com, I believe it was. So you can go plug those numbers in and kind of mess around with all that information. But at least now you understand how you can get that number and how you can figure out where you can get enough to be able to pay your bills. Obviously, if your bills are higher than what we did as an example, you'd need more. If it's less, you'll need less than that, obviously. But if you want to put it all in at once in today, it's over $600,000. If you want to do it over the course of 20 years, put in $1,000 today, put in $500 a month, and you will be able to hit that goal in 20 years, and then you can live off of your dividends, which would be pretty freaking cool. Now, I want you to keep on learning and growing when it comes to investing for the long term, so check out my next video right over here. My name is Dennis, and I'll see you in that next video.